Hello, everybody. How are you doing? Welcome to our webinar, WoW Trades. This is me, myself, Alberto Alvarado. Let's begin. Well, some quick facts about me before we start the webinar. Traditionally, I do it. Again, my name is Alberto Alvarado. This is my picture. I'm a self-made trader. I have more than 11 years of experience. I started trading the markets in 2005. And after losing my first live account in the first month, I discovered that the financial markets were what I was looking for. So I decided to take seriously my self-education during the next 2 years. So by 2007, I started having the first results of my efforts, just to see again my accounts evaporate again in the financial crisis of 2008. There, I had to decide whether to continue or leave it. I decided to continue at a very high personal cost. Why I insist on this is because you will face. I just had a heads up. Why you always say that? That it was a very high personal cost. Well, because trading is so difficult that the challenges that you will face are not only strictly from the skill development. You will have personal issues because your personality will start changing. If you have a wife, if you have a husband, if you have a boyfriend, girlfriend, those are the ones the closest ones to you are going to be the first ones to start seeing those changes that maybe are invisible for you. So at times you need to decide on your personal relationships in order to continue. And it's some of it. This doesn't happen to everybody, but those are one of the personal costs of the high cost of for some to develop the skills. So you need to be aware that if you need to pay that price at the end, you will have the freedom to decide whether to continue or not. That was my case. I had to decide. I decided to continue, and some people I had to let them in the past because I started changing and I stopped being compatible with them. So, well, after having paid this high price, I decided to continue after the 2008 crisis. I realized that my edge was not complete. So what I did is to integrate the subjective, creative aspect, emotional, intuitional into my trading. It ended up working very well for me. Of course, this is depending on your trading style and personality because this won't work for everybody. It depends on, for some people, including subjective elements, could be a suicide, and for some other, were the missing piece of the puzzle, like in myself. So this is only a warning. It depends on your personality, but it would worth a try if you haven't tried it. Maybe you're looking for that extra aspect to develop your edge, and you will see if it works for you or not. If it works, you continue developing it. If not, you just quit it and go elsewhere, and you try to move on into maybe specializing to more objective approach, etc. Besides that, what you will see here is the conjunction of that, the traditional technical analysis using basic tools like MACD, Bollinger Band stochastics. I don't use any kind of advanced indicator or that that kind of stuff. And of course, the fundamental analysis. I don't have any kind of super credentials on economics. I don't have a master's in economics or a master's in mathematics. No, it's just to keep up with the news, to commit yourself, to inform yourself through reliable channels what a fundamental news release will mean in the short, medium, and long term. Okay. So hopefully everything here will help you to develop your own approach and your own edge. For the ones that haven't subscribed to my YouTube channel, you are very invited to do so. At the end of the webinar, you will receive a link with the recording of the webinar, so you can look it up calmly. But in YouTube, you go in the search box and you type this IBB apostrophe S Trading Room channel. This shows up, and you click subscribe. Well, today's agenda for Wednesday, April 26th, that is today, we have again, this is going to be a very, very quick webinar because the circumstances are far from ideal for trading. So I only will just have a general outlook of what is happening in the geopolitical arena, North Korea and that region, that it's still active. And even though we've been seeing some kind of tensions release, the conflict is still there, and it could mean a lot for the markets, okay? The other major news was this latest French election this weekend. Apparently, the markets are kind of discarding that Le Pen could win. I don't share that opinion completely. I still believe that Le Pen could win the second round. So the markets are reacting like if Le Pen was already defeated, is already defeated. So what I expect on euro is that the markets, as time passes, will realize that Le Pen is still a risk for the EU itself. So I think that this latest bullish sentiment on euro is completely overreacted and out of any logic. So we're going to review the charts there. Of course, we still have the UK anticipated elections. The Prime Minister called for anticipated elections last week. We had a lot of bullishness in pound and in euro because of that. But the real thing, again, is that we really don't know if this is a disguise for withdrawing from Brexit and withdrawing from withdrawing, or if this is for the reasons that the Prime Minister just said, that is just to gain more track and momentum and strength to negotiate a good deal with the EU. I honestly believe that there are good chances that maybe this is a disguise for just quitting Brexit. So, of course, that could have a positive effect, or at least theoretically, in the pound. But we need to realize that since we have the uncertainty what will happen in the general elections, if we could actually have an anti-Brexit, a new administration getting into the power, well, we don't know if they will be able to withdraw from withdrawing or not. So that uncertainty should be reflected in pound dollar bearishly. Apparently, that hasn't been the case immediately, but the same case that I'm just talking about, the euro dollar being super bullish after this latest election, first round, is completely out of any logic. There is no reasons for assuming that the risks are over in the EU and in the UK. In the UK, because we don't know now if Brexit will take place or not. In France, because we don't have zero risks for maybe having Le Pen winning the second round. Then we have the President of the United States bluffing on NAFTA withdrawal again and threatening and talking with his style, very personal style, now against the Canadian administration, saying that the Canadians are abusing from the United States, and he's saying the same thing about Mexico. Apparently, the wall that he wanted to build is going to be postponed. So there are a lot of the POTUS has a not very welcoming talent of spooking people, confusing people, and for some reason he believes that is an advantage for negotiating, but the problem is that markets really dislike this kind of stuff. We have the other recent POTUS tax reform that apparently he is willing to push forward. It is being questioned by some people that maybe cutting the business tax at a level he wants to put it could have negative effects. But the real thing is that if we have this business tax cut, what we could expect is to have inflation, an inflationary process that could get out of control. And of course, that would warranty people holding dollars that the Fed will have no other choice but to continue with the rate hikes and even become more aggressive. So all this should favor long-term the dollar. I believe that the tax reform is going to be the only thing that Donald Trump will be able to push forward as he wants it. Everything else has been a disaster, but I believe that this is they will just allow this guy to have this done his way because apparently the risks are medium long term, but at least in the short term they could be it could be a good thing. So we're going to see how that could be reflected and has been reflected in the price action in the charts and what we can expect in the future. I need to remind you that due to all these reasons, politics, French election second round in some weeks, that not necessarily mean that Le Pen is already defeated. UK anticipated elections, that could mean withdrawing from withdrawing at the end, maybe, so that adds up another layer of uncertainty to the markets. And POTUS trying to push to withdraw or something like that from NAFTA, that he said that it's impossible. But the thing is that in the meanwhile, he could really put very nervous the markets. And besides this tax reform that could take place, should help the dollar short term, bullishly, pushing Fed to hike the rates, and that would be maybe that could generate some important opportunities overall in dollar yen. So let's go to the charts. First, well, let's review cable. As you can see here is cable, pound dollar, 1-day chart. This is what I've been commenting. Let me zoom out a little bit so we can have this context. Okay, this is the daily chart, and this is when we had the news of anticipated elections. Of course, it is a no-brainer why the markets reacted bullishly. The only thing that this could mean is that the markets consider that this is the first serious scenario where a no Brexit could actually happen. I've been explaining to other fellow traders that Brexit is far from being something easy to do and painless. The problem is that even when Brexit has not already happened, but it's in the process of happening, there's been people in the UK that's been suffering the natural consequences of switching paradigms like EU. And of course, they're going to now, maybe even if they voted for leaving the EU, now they are facing problems that they didn't have before because of this switch, because of this change. So now it is going to be super difficult to resell the idea that Brexit is something good for the future, because people can vote for a future because usually they don't have an idea what the cost could be and how painful it could be. So it is easier to vote on an idea, in this case Brexit. The problem is that when you are facing the real consequences, this is the same thing as having some brackets on teeth, job done. The first day that you have these brackets on your teeth, you barely can drink water because it hurts so much that it becomes almost impossible even to wash your teeth, even to drink water. So this is the stage that a lot of people that voted for Brexit are facing, more in a more magnitude some than others. But for these people, even if they voted for Brexit, it's going to be very difficult to resell the idea that let's just continue with the pain because it's the best thing for the future. If now you give these people a second chance to vote again, not directly for leaving or not, withdrawing from withdrawing or not, but being able to vote for maybe an administration that will maybe could have Brexit ruled out and dispose that Brexit thing is going to be now. A lot of people will rethink their votes. So the thing is that Brexit really won by a very thin margin. I don't think that now that people are under the reality of a Brexit that is going to be super painful at the beginning, and maybe in 10, 15 years is going to be the best for the UK. That is what I believe. But of course, they need to pay this initial maybe 5, 7, 8 year pain, a painful situation. If you give people the chance to vote again, they will vote. You know what? Let's go to the previous stage. Yes, maybe it's going to be better, but in 15 years. But it's hurting now. I'm feeling pain now, so let's just quit the pain. So this is that is why I believe the markets reacted positively on this news because they saw that the probabilities of them having an administration wanting to withdraw from withdrawing and having the legitimacy of being elected massively, they would have the system in the UK would have the legitimacy to withdraw from this thing and maybe quit Brexit. I believe this is the reason why we have this very big candle, but as you can see afterwards, it's been ranging. Why? This is no easy thing. We are in this region, as you can see, this region of resistance that was previously a support, but this is super huge. Breaking this, you need much more to break this. Not only a speculation that maybe Brexit won't happen. And in the meanwhile, the more time it passes, the more uncertainties becomes. So that should be translated variously. Besides, we have the super huge resistance. Just watch the volumes here. This support that was eventually broken was holding this super massive volume. Look at the volumes now. So you really need a lot of things to have this zone broken. That's why I believe that even when we could expect that there are real possibilities of maybe having Brexit not happening, if people vote for for an for a pro-EU candidate, if that happens, I honestly don't know the real small details on these elections, but the thing is that it's a general election. So you will have a potential massive movement of leadership. And of course, a new leadership could then, if it has the support, people support, and political support, to, of course, could simply rule out Brexit. So, but in the meanwhile, we need a lot of reasons and the uncertainties out of the equation to have this resistance broken. That is why, as you can see, this is the resistance zone. And this is why lately, this is a daily chart. The market, just after having this good news, it's been ranging in a very tight range in this resistance. Not even having the Europeans, the French voting, favoring maybe a pro-EU candidate than the anti-nationalist candidate like Le Pen. So yeah, trading bullishly pound could be a disaster if you really don't know what you're doing, because longing at these stages is super hard. This doesn't mean that this could not happen. Yes, this could happen. We could have this region broken, even if it looks very difficult. But of course, the volatility in the meanwhile and in the intern, the volatility and price action erraticness that you could face here could be so wild that if you are not very good at trading, you could lose a lot of money. So I strongly suggest to stay aside pound. Maybe for the bulls, I believe that they would like to see at least the price getting back to this level, to the 126, 125, something like that, maybe to feel more comfortable to buy at these levels and then retry to break in a second attempt. As you can see, we haven't had a second attempt to break this. And due to the magnitude overall, the volumes initially that are sustaining this resistance, I see it very difficult that this could continue convincingly to the upside, unless we have the results of these anticipated elections in the UK. But again, I see it. I don't think that now an administration pro-Brexit could win. I assume that there are going to be candidates pro or an anti-Brexit again. So the possibilities of having an anti-Brexit administration now are super high. So yeah, in the meanwhile, maybe just stay aside of this. This could mean a potential bullish opportunity, yes, but not buying at this resistance. Okay, so shorting here, well, it depends on how you like the risks, because of course now maybe shorting here could mean that you need to be able to put the stop loss above the 130, because this is, I mean, you could have another attempt to break this, but you will face the psychological. So when you have a psychological with this super huge resistance, the chances of having the price at least coming back to the region of range bound are very high. So if you really want to short something here, maybe your stop loss should be at 131, 132, or something like that. So this requires that you have an in-depth knowledge of how to trade the dailies. Usually the retail traders like us, we don't like using these kind of big stop losses. So yeah, again, the circumstances are far from ideal, as I just said some minutes ago. I'm just showing you the potential, how the chess game is being played now, and we are in a very tight situation that there is no clear winner, or not even we have higher probabilities of something happening. I mean, the higher probabilities are that this resistance should mean that the price could go down. But the uncertainty has the twofold effect. This could turn out to be a bearish move or a bullish move. Because if tomorrow, day after tomorrow, we have some comments in the UK that could confirm that these anticipated elections are a disguise for withdrawing for whatever the reason. Maybe the prime minister just realized that this could divide the country. Actually, maybe Scotland could wish to stick to the EU, so that would destroy the UK as we know it. So maybe just for national interest, or maybe they just realize that it's going to be super expensive at the beginning and it simply doesn't worth the risk. Whatever the reason, maybe to disguise this institutionally, this is the best disguise. Okay, so why in the hell somebody would like maybe to risk having, for example, opening a short trade? You need to put your stop loss at 131, 132. It's super wide. Is the same scenario to the downside. If you buy here, it's a mistake because it's a resistance. You need maybe the safest way to play this could be wait a retracement up to the 125 and maybe decide then to buy something. But again, we're still far from that scenario. Let's watch quickly the hourly chart to see how this looks. And this is what I've been saying. This is the anticipated elections effect, and afterwards, this is it. Up, down, up, down, up, down. The market is not really knowing what to do here. The bears are shorting here because it is a technical resistance. And the bulls, I don't know if they are really willing to continue risking buying here, because it's a super risky thing to buy at these levels. But maybe the ones that are buying here are the ones that are well informed or way more informed than us, that maybe have insider information on what is happening in the UK anticipated election stuff. So just try to stay away from this. This is far from ideal circumstances. Let's move to the euro dollar just to see how the behavior of this. This is the daily chart, and as you can see, we have a rectangle pattern. This candle is when we had the anticipated election stuff. Okay. At this moment, let me draw another pattern that we have. Where is the drawing thing? Here it is. It is it was here. This is it. We had an important trend line broken some days ago, like maybe 1 month ago, on April 7th. It was a fake breakout. It actually tried to put the price above this support, broken support. The market actually did it. After having the anticipated elections in the UK, we had this positive effect on euro. Why? Because it makes sense. Of course, an EU is stronger with a UK inside, so this is the reflect of that. Then we have this 200 pip to the upside gap after having the elections with Macron leading for the second round. But as you can see, longing here is not a wise idea either because we're having a very similar scenario than the one we have in the pound. We are testing this high, this resistance, this resistance, and this resistance. Okay, maybe let me zoom out a little bit. I want you to check this out. As you can see, the price levels that we are retesting, that is this resistance by this level, this resistance line, this zone, this thing. But look at this. Look how the volumes are at this region, are super high. Compare them with the volumes now. So again, we're facing not the exact same, but same enough situation for us to reconsider any bullish trade on euro. Okay, we have these resistances plus one of the points of this resistance is a super high volume. So again, having this level broken, trust me, they really need way more than only having Macron leading. Why? Le Pen still has a lot of things that she could do to gain the votes of the people that voted for the candidates that are already discarded for the second round. Apparently, she just started with the right foot, quitting the presidency of the Front National. So yeah, it's not going to be easy, and I believe that this gap in the markets just staying here is going to be very tough. As I just said some minutes ago, the market will eventually need to realize that this gap is completely out of any logic because we don't have any certainty now. We actually have, it is as easy as this. If you have four candidates, it is easier to defeat, um, it was easier to defeat Le Pen in the first round than in the second. Because in the second, you could have a lot of support from other voters for Le Pen. Why? This happened in the United States. Bernie Sanders, that was like one of the Democrats competing for the presidency, just quit for supporting Hillary Clinton. And a lot of voters for Sanders decided not to vote for Hillary Clinton. They just decided to vote for Donald Trump. So this is a phenomenon. When you have your candidates losing their first round, it's not that obvious that people would just trust the candidate that your losing candidate is telling you to trust. If you feel disappointed that your candidate lost, it could be way more attractive to vote for radical ideas. Because you're disappointed, you are sad. And this kind of radical ideas, unfortunately, have this effect on people. They boil the emotions of people. So Yeah, the euro is simply people that believe that we are in a zero risk moment now are completely wrong. So watch it again. Resistance zone, the kind of resistance, the circumstances politically is I don't see myself buying here. Maybe trying to find shorting opportunities, looking for this gap to be closed. That is like something that happens half of the time. The gaps to be being able to be closed. Maybe using a stop loss at the one above the 110 because of course the market could get 110 and then recognize it as a stronger resistance and then move down. So maybe putting a stop loss like a 1.11 or something. You need to watch the smaller time frames to decide on this. But buying this, it is simply. I mean, if I have to decide whether if I need to take a trade, whether long pound or long euro, it is riskier to hold long euros. It is risky to hold long pound. That is a fact now. But at least we could have the chance to have Brexit ruled out. So that could have a positive effect. But the risks that we're facing here are the complete opposite. We could have somebody just wanting to withdraw now in France. So what's longing here? I mean, as a no-brainer, as a good habit, you don't long at this kind of resistances, okay? No matter what the mass media tells you, that is important for you to have in mind. Let's go to the 4 hour just to see how this looks in the, okay, we have, this is Monday gap, the market having holding good volumes, well, try to retest these highs, but now for the first time we're below the moving average, the 14-period moving average, okay? So this doesn't mean that this will continue going down right now, but this is the first signal that the super bullish momentum is fading away. Maybe it could find further support to the upside, but it could take some time. Overall, because this is a resistance zone. So yeah, you have all those resistance reasons, and now the market's uh, signaling you that is testing this moving average. Is telling you that at least that super immediate optimism is just fading away. Besides, and this applies to the pound and euro, besides these political risks, we still have the North Korean conflict running there. We have Russian and American vessels, aircraft, etc., getting too close to each other, and something could go wrong. So we don't have reasons just to go for riskier assets. I am really surprised that the euro really made this kind of move under these circumstances. But well, maybe it was just temporary, maybe it was just circumstantial, initial optimism, and maybe the market is just about to take the natural and more logic approach. Under the circumstances of your strategy, there are no reasons to hold long. I mean, there will be better times to hold riskier assets, not now. Besides euro, the risks, the election risks, another reason maybe to avoid holding euro dollar, euro loans. Another reason to avoid holding pound dollar. Maybe the initial reaction is because people is betting that we could have Brexit withdrawal. But if not, the market could then react, at least initially, super disappointed. And we could have a sudden sell-off again, even retesting the previous low. So yeah, what if you want to hold riskier assets now because circumstances are not favoring this? And the most important thing, I really believe that this tax reform will be pushed forward. That will push people for buying dollar everywhere because this the initial effect, not immediate, of course, is that this will confirm that Fed it's almost having the certainty that Fed will have no only maybe 3 more rate hikes this year, but even 4 or even 5, and maybe not quarter of a point each. Maybe one of them could be half of a point or maybe whole point. So that will throw a speculative buying spree on dollar. So that's another reason why you need to reconsider holding euro longs and pound longs. This is reflected way more visibly in the dollar yen. This is the dollar yen daily. Let me zoom in. And this is by far the most transparent one, because I've been explaining this, that fundamentally the dollar yen has a fundamental clear direction. It's the only major pair that you can actually foresee and anticipate the next 4, 8, 10 years of what you can fundamentally expect on this trade, on this pair that is a bullish trend. Of course, we had the first attempt here, the price when it retested the 112, then started moving to the 115.50 and then started selling off. This is when we had the first FOMC comments that were not as bullish as expected, and then we started having the North Korean conflict getting bigger and bigger and bigger, and this started selling off. And even though Japan is very close to this conflict zone, the market is just doing what they are familiar to do under this uncertainty circumstance, that is selling dollar and buying yen. Okay, so we had the sell-off continuation. Then we had the situation stabilizing a little bit in the Korean Peninsula. Even if the problem is active there, at least it's getting to an stability point. So maybe that is why the market just stopped selling off here. We have this gap to the upside after the French elections, but look at the different reaction. We're not retesting here a major resistance. But if you compare the euro at the top of the gap, it just stopped moving up and now is showing weakening to the downside. The cable didn't even react bullishly or very bullishly after the French first round election result. The cable just stood testing the resistance. But look how the dollar yen. Why? Three reasons. First, North Korean conflict is getting in a comfort zone where the markets could start feeling kind of comfortable again. That could go wrong, of course, and then the immediate reaction could be this selling off again. But the reaction is super clear. Now we have euro risk, initially considered to be ruled out, but guess why this is happening here? These recent bullish 2 days are not related to anticipated elections in UK, nor Le Pen not winning the first round. It is reflecting what the markets are expecting from the Fed for the next 4 years. Maybe the market is foreseeing that the tax reform will go, and at least the initial results are going to be this. Inflationary process, and the way to domesticate inflation is through interest rates. So this is why I would avoid at all trading euro dollar, pound dollar, and I just would focus on trading dollar yen. Why? Either to the upside or downside, it is way more predictable to trade. Why? Because we have less noise factoring in dollar yen than in euro dollar, pound dollar, and emerging currencies, etc. And the markets recognize that because it's the only major pair that is doing this. And besides, there's a very important thing. With other fellow traders, I was saying that last week we should have the price closing above the 109 to allow this to gain territory to the upside. Some of the lost territory after the 115.50 zone here that causes sell-off. So the week was closed above the 109. It was boosted by this gap after the French election first round. But then we have this tax reform that maybe will go through, will be pushed forward. So Yeah, we had a lot of reasons. First of all, the price managed to close above the 109. The other super important, the psychological 110. As you can see here, this this price it is super important to confirm the bulls their bullish sentiment. Okay, so the gap is not coincidence why it wanted to close to open the price after the weekend here, and it's not coincidence this Monday's price to close above. The second day it just wanted to close the gap, it was not able to do that. Usually this is translated into more uncertainty because what you can expect when you have a gap is that if it's not able to be closed, usually that is translated into a instability. But I can tell you that during this last year, these last 12 months, I've seen a lot of gaps that have not been already closed. No matter what, we have a weekend gap after Brexit in the weekly charts that has not been able to be closed yet. So this year, the markets are showing us that they are taking care way less missing gaps. The price action was not good enough to close it. So yeah, I wouldn't be surprised that maybe this gap simply won't be able to be closed and this could continue going up. Of course, again, buying here is too late. We are retesting this and this and this. So yeah, I could expect maybe a movement to the downside now. I wouldn't consider at all unless we have something different happening in the Korean peninsula, like for example an actual nuclear test by North Korea or an actual missile test by North Korea or some crossfire between I don't know China, Russia, United States, China, etc. Maybe something like that would immediately have a bearish effect here. Okay, but according to the recent circumstances, I would simply not short this. I would wait for longing opportunities. I see very difficult that the price will convincingly retest the 110 again to continue its movement up, but this is like the ideal trade. You can build alternative and secondary scenarios from that, from this idea that I'm sharing to you. Maybe you could find long opportunities in the 110.75 or something. But the ideal thing is to wait for this 110 to be tested again and then try to wait for the next bullish wave. Why? Since here, and this is important, this is why this resistance is so important. The first attempt under Donald Trump's administration of dollar yen trying to go to show bullishness was here. At the moment, it retested the 112. You can see it, what happened afterwards. Okay. Now the price just managed to get here. So it is like if the market is now in the mood of resetting, okay, the things. Okay, we were so bullish here. We had this disappointing movement afterwards, and now the market just made it here. So the market is like, okay, we just reset it. We just reset all the sentiment. So from now on, we will start building again what we expect from this. The fundamental thing is already set. It's to the upside. So that is why here we don't have like a more complicated thing to figure out. So what I believe is that the market now will try to look for some kind of support at this region between the 110, 110.50, 110.75, and maybe try to move. The next movement would be like in here, 112.30. And well, it depends on the next price action and overall, in this case, dollar yen, the North Korean conflict. How it goes, if it chills down. I am a believer that we will have in the North Korean peninsula is that North Korea is not far from announcing getting a deal with China to exchange its nuclear program and bombs for financial aid, uh, I don't know, compensation programs for agriculture, etc., in exchange of that. That is what I believe is going to happen in North Korea. So yeah, if you take it, is the only conflict, is the only risk now in dollar yen. In all the others, you have this very same uncertainty factor plus way others. So just try to focus now in dollar yen. You maybe it moves the potential winning potential in this dollar yen is less than others, yes. But in the other hand, you have the risk potential reduced. Okay? If you, for example, decide to go long at 110 again, you could use a 100 pip stop loss easily. I mean, you don't need to use a 200, 300. In dollar, yeah, in euro dollar and in pound dollar, the minimum stop loss in average is to 250 to 300 pips minimum. So yeah, it would just worth to wait for a good entry point in dollar yen and use maybe a 100 pips stop loss. Okay. So it's time to call it a webinar for today. I would like to thank everybody for showing up and listening to my words and my thoughts on the markets. And just a reminder, we are on way than less good circumstances for trading now. Why? We have a lot of very important things to happen in the next month. That is the French final results, the general elections in the UK, to know if the tax reform goes or not, and most likely to see the first signals from North Korea of actually quitting and exchanging the nuclear program for another stuff. So all this month will be risky to trade. It could turn out to be erratic, not only volatile, but very erratic. So you need to find, if you're going to trade something either to the upside or downside, you need to really find places and prices to long or short that you really feel comfortable with, overall with the risk. If you're trading binary options in binary.com, even if maybe you don't have to worry about stop losses, in these circumstances, it is even more important that you calculate a very good entry point that you feel comfortable with, and that you don't get greedy with the time frames, like saying, okay, I will just open a 24-hour, 48-hour binary option. These times could get very tricky, so try to push yourself to use bigger time windows, like maybe 1 week, 2 weeks, 3 weeks, besides really finding very good entry points. So you, at the end, if your trade is wrong, that you could be comfortable and happy where you trade because you traded a good price. If you bought at a very good support. You're not going to buy at a resistance, please. And if you're shorting something, find a good entry point to short it. A resistance. Don't short at the support, please, because under these circumstances, it just doesn't make sense under normal circumstances to do that. Now, even less. So just be aware of that. And in the binary option, again, try to, I'm telling you that now. In the next month, you could expect a lot of movement to the upside or downsides, okay? That is for sure. In the next month, you will have a lot of very crucial information from UK and Europe, and maybe Korea. So don't expect maybe that this month will be easy. So maybe even considering 2 months of time window for your binary options in the Forex market now could be a wise thing. But you need to do your own analysis and overall trade the way you feel comfortable with. Maybe if you don't like to trade 2 month binary options, well, but maybe don't use your average timing, like maybe 2 days, 3 days. Maybe try to shape a little bit longer time frame binary options in these occasions, because yeah, as you can see, pound can go either side, up or down, and just return at the entry point. Euro dollar could do the same. I see it more difficult in euro dollar, but well, this is the overall information that I wanted to share to you in this very important after weekend French elections. Remember that I will broadcast in next week at the same time through the same instruments, same place through binary.com. My weekly webinar in English. So stay tuned. Maybe if I see that a clear opportunity is arising, I will let you know that in the next webinar. But now, yeah, I see it very difficult to feel comfortable with opening a live trade. It's just messy. It's just so strange to trade now that yeah, maybe it's just a wise thing just to stay sidelined. Okay. So thank you very, very much, everybody. Remember that this is Alberto Alvarado. This is our webinar WoW Trades. I expect and wait you next week, same time, same place. Thanks, Shadis, for recording and hosting, and binary.com for allowing me the opportunity to express my opinions here. So I expect you next week. Bye-bye.